Eric Gadisi, Chris Mannion, Headcount experts. Today we're talking about everything that has to do with the different stakeholders during the planning process. Let's just kick it off easy. Who are the different stakeholders? Who are we talking about? What behaviors are we talking about? Kick it off. Let's set some context.
Yeah, I mean, I think you've got your obvious ones. You've got the HR team and all the different people involved in there. In terms of kind of planning for the future, you've got your HRBPs, you've got CHRO, obviously, who's going to be having those exec level discussions. You've got your talent acquisition department, but then you've got all the other stakeholders involved. Obviously, the business is going to have a strong say in it. But what about all the kind of different departments that are going to have to work with people as you're thinking about onboarding and supporting things like IT and kind of L&D within HR, and then kind of facilities. Just there's a whole kind of team that goes behind the headcount plan, and this is where I think a lot of people might miss at the actual part of the planning process to actually deliver a solid plan going forward. So I know we're going to get into the weeds on what each of these individual people is going to be involved in and how we can best set them up for success. But I think the kind of key takeaway is there's probably a lot more people involved than just the business and the CH.
Yeah, and we heard a few weeks ago from Jim Miller, who does a rolling forecast type, which allows you to learn a little bit about what's coming in the next few months from, a longer term and ongoing planning process. But a large percentage of companies are doing either annualized planning bottoms up or tops down. And so it's a extremely cross-functional process, tons of stakeholders with different dependencies that creates kind of like this burst of work, or at least the notification that work will come through. And making a good point that there's not only who requests or manages the hiring process, but the folks who support what happens after you hire somebody and ensures success from onboarding through their employment. And so we're going to touch on all of it. I think kind of the planning process is where we're focused. So it's kind of what everyone's in the middle of now, which is typically a, 4 to 12 week process of what did we do this year? What do we expect to do next year? And how do we balance the existing workforce and net new hires to achieve an outcome that is either profitable or just hitting a goal that we've set either for our investors, as an executive team, or as a business. And so through that process, there's kind of the pre-work. And the pre-work is everybody getting ready to come to the table for what's happening in the headcount planning process. So your finance folks are doing their best to get all of the data right for this year and build out future forecasts with sales leaders and business leaders about what's going to happen next year. So a lot of consolidation, a lot of data organizing. And so there's a tremendous amount of activity if you're a workforce planner, a headcount planner, in TA in finance, to help that team get ready for planning season. What have you experienced, either at Wayfair with your customers today, that is like good prep work on the finance side of things? What do you look for in businesses that do it well?
Yeah, and I think it's a strong point. Quite often, this process is led by finance. I think at least in a lot of the companies that I work with, generally private equity backed or kind of later stage, where they're not necessarily just trying to grow at all costs, and the focus is solely on revenue. It's like, how do you actually build a sustainable organization? And so I think finance is going to be leading that conversation, leading that discussion, setting those targets. But it's also not an autocratic process. You've got all of the stakeholders in the room, and the targets have got to be realistic. From the business side, that's okay. If you've got your sales team, what is the kind of likely sales growth that you could anticipate achieving next year based on market penetration, based on different geos that you're currently operating in? And then how does that align with your kind of financial plan for top line growth? But then you've got to then factor in, okay, if you then achieve that sales growth, what is the support cost to actually deliver the service, the product, or whatever that you need in order to kind of achieve that? And so all these numbers start to come in, and it's not just kind of a kind of one and done. Here's the sales growth. Here's the total cost. It's how does that actually kind of map out over time? I think this is where talent acquisition, particularly, can have a really strong influence. So the TA team, or at least the leader of the TA function, has got to be involved, and you'll be setting clear expectations as to what does that kind of pipeline delivery of talent look like over the course of the year. And so you kind of, even at that early stage of planning process, you're kind of pressure testing what is potentially achievable and what is going to be outside the realms of what can currently be accomplished. And quite often, as we've discussed in the past, this planning process happens right at the end of the financial year, with very aggressive targets then coming in Q1. But we know that time to hire and ramp time and everything else that comes in means that if you're going to grow next year, you're actually going to have to factor all those timelines in order to make sure that you're actually hitting the target. And so you could be aiming to grow your revenue 50% next year, but if you don't already have the pipelines open and the hires planned, then you're going to have to do something quite drastic going into Q1 in order to hit that aggressive growth target.
Right. I think finance, when they're prepping for next year, they are looking at the performance or the ROI of what's happened thus far, and then forecasting based on everything we plan to do, what will the ROI be? And bringing up a good point, like TA executes the things that are kind of like, how do I want to say it? I want to say like TA executes the things that are planned, that are the meeting the demand of the business, but there's also this component of investment hires and risk taking, and we want to try something as a business and see if there's a return. So this could be a pivot for a company, it could be a new product investment, new location. When finance is taking a look at all of the information that's coming out of this year to prep for next, they have this context that is kind of the universal language of investors or executives, which is financial performance or product performance that then results in positive financials. And so they're taking a look at, how did we perform on the things we set out to do? So that could be revenue producing roles and whether or not TA met the demand of those revenue producing roles. But it could also be, what is the project? What is the product? What is the location? What is the investment we made? And were we correct on that investment? How much risk did we take? How much ROI was it? And you're going to see this balance when they're making a headcount plan for the following year of how much do we stick with what we know and try to generate out of a core business, and what type of investments are we planning to make. And so for each stakeholder that's participating in the process, there is a downstream effect of what an investment hire would do versus, it's called a core hire, somebody who's executing the current business. And so while the TA team could produce kind of metrics about core hiring performance and meeting the demand of core hiring performance as it relates to like backfills or net new hires or on-time hiring or on-budget hiring, there's also this component of, well, what if we take that same money we would use to grow product in one area and invest it in this new thing? Would we see a much higher return on investment? And so that kind of tone setting with finance is the reason why, it's kind of the basis for my perspective on each stakeholder's involvement of the process. Is as you produce what you've done this year for finance, you are selling why it was good for your team, for the business, so that they incorporate the right ROI in what you're doing today with what what you plan to do in future years. So, for me, the ROI piece of every headcount planning process starts with finance, and that then permeates the executive and board conversation. But then that's something that every stakeholder leading up to the process and participating in the process should be doing, because that's kind of like the language you have to translate into how finance perceives something that you're doing in the language of ROI.
I think you've touched on I think an important point there of the kind of the known versus unknown, and quite often you're seeing companies that are trying to test a new market, whether that's a new product line, a geo, and there are so many unknowns there. I think one way of approaching it is to actually look back and see, when you made a similar push into an unknown area, what was the results, and what is the kind of range of expectations that we can have. But I think there's two big points that you have to consider when entering a new market. One is, what is the sequencing of actually how you build out that new market. And then two is, what is the actual kind of market mapping for availability of talent in that space in order to actually build the team that you need. So as you're thinking about the kind of sequencing of hires, if it's a new product line, for instance, you're not going to start by just hiring a bunch of sales reps and then having them go and build the market. First, you've got to figure out if the market's there and generate interest. And so you're probably coming up with some kind of combination of product marketing managers and R&D teams in order to actually build out the product in collaboration with the market and actually get the brand out there. From there, you're then starting to maybe sell, or maybe even pre-sell with some sales engineers. Then you've actually got to support the product once it's launched. So you're going to need post-sales, customer success, and then kind of longer term, you're going to have more kind of account management. So it's not just thinking through, okay, how do we build this product and how do we sell it, but how do we think about the end-to-end lifespan of this, and then layering in how long it actually takes to kind of build those teams with the information you get from this kind of market mapping, to actually understand, what does this new product entry look like, and not just kind of what are our ungrounded aspirations for the coming year, that we could set up and we could put into the budget and lock in now, but maybe don't actually achieve in the coming year. So I think that's where a lot of these conversations are really important, because you're going to need to understand that all the pieces of the jigsaw puzzle. And if you only have half of the team that's involved in actually building that process in the room, then you're going to miss half of the picture.
It'll be interesting to see how AI changes the speed of product development and launch. But as far as up until now, it takes usually more than a year to get something built, tested, and start the process of understanding whether or not you have product market fit and then scale from there. And so if an annual planning process is fit to a certain period of time that's shorter than the life cycle of that product, there's a couple of things that need to happen. So, what we've talked about thus far is finance setting the tone for what's happening, but the executive team is going to be making the bets on that information, whether or not we continue a product that's already in development, start a new one, cancel it. And that information needs to be aligned down through the executive team so that it can be disseminated down to the manager. So if you're a hiring manager who has a new product or initiative looking to add staff to your plan for next year based on what your goals were previously or what you thought the business was, that would be a clear break in expectations. If you like, oh, I'm starting this new product, let me get a bunch of people next year to continue my expansion plan. If finances determine it's not really that profitable, you might not expand it. And then the executive has to tell you then back to that initial planning process. So, the prep work that finance is doing is they're collecting from the business. How do we perform on things that we've hired? What is the result of our investments? And they're translating it for executives so that they can say, all right, what is our direction for the business? Now, hopefully this isn't happening just at the annual planning process, but the idea that for the planning process to go well, you need to have a unified language of what is the financial impact, a unified business story from executives about what we intend to do, so that your budget owners or department leaders can then manage the expectation during, in this case, a bottoms up scenario, and or use the calibration meeting in a top down scenario to say, like, this is what we will or won't be doing. And so that whole process, that prep work process, requires good data from TA. It requires good financial tracking of net new projects, good corporate taxonomy, good project tracking for everything that you're working on so that you can get finance the information. As the faster they get information about headcount performance from 2025, the more unified, the more smooth the 2026 process will go. I know teams that spend months just trying to figure out what happened, especially in big scale environments, because the data is terrible. And so once you get them the data that they can work from, the faster the message gets unified, the better you can communicate it, and you just have a more it's a more smooth running annual planning process.
Yeah, and I think that's where the kind of like hypothesis setting and a more scientific approach, which I know a lot of companies, a lot of leaders are adopting now. It's not a case of, okay, we're going to allocate this budget and this is your budget for the year. It's, this is what we think will happen, and we're prepared to put this much money into it, and it's actually going to be staged. And so, in order to release the next tranche of budget, we have to hit these kind of milestones that would prove that our hypothesis of entering this new market or even continuing in the same market is true. And if we don't hit these milestones, then the budget doesn't come and we kind of reassess. And it's a little bit more of a kind of an agile planning approach. And I've seen this work highly effectively. And even in our discussion with Jim, and as he was talking about a kind of revenue triggering different hiring roles to be released to the market and the kind of cohort based approach that they take, it kind of follows this kind of approach. So you're always setting what's the next goal that we intend to hit, and then when we hit it, then we release the headcount, and then that ties into the budget. This makes the planning process a little bit more complex, but actually the management of the headcount throughout the year is then going to be a little bit more seamless, because you know what you're working towards in the next round, and you don't just drop 100 recs in the ATS on January 1st and with no kind of plan on how to fill them or what expectations to get. And I think this is where some companies might get themselves tied in knots, but I think the strong leaders, the strong kind of workforce planning teams are already going through this process.
Yeah, it's an interesting point. Like, I think depending on your planning style, so if you're top down, bottom up, or rolling, you're gonna uncover the same thing, but at different stages in the process. So in a rolling forecast, or like Jim said, tying revenue to headcount, you're calibrating on headcount release in real time. If you're a bottoms up business, you're going to make all these requests and you're going to calibrate during the calibration meeting and release headcount so you'll find out what the priorities are or how the business values headcount kind of during this calibration process as managers negotiate and trade the headcount based on like overarching business goals. And if you're top down, you're going to get a set budget and you're going to say, this is the budget that we associate with production from your team. And all of these have downstream effects on how the HR team will balance the org structure, will navigate the workforce plan, whether that's management ratios or workload ratios, and the impact on the TA team, how they plan for capacity against these different styles of recruiting demand. So I think, if you're looking at each individual stakeholder in the process, the style is almost as important as the analysis because it's going to change the way that you do your headcount planning for the next year. And so stylistically, like, where do you come from? What's the work that you've done and how have you seen that play out for the hiring manager teams and the TA teams at your previous experience?
Yeah, I mean, I've seen seen all three of those planning processes implemented, and I actually think there's a use case for each one of them. It's not like one approach is best, although I would almost always argue that the agile planning approach is best, just because that's what I kind of grew up doing. I think bottoms up makes a lot of sense because you're going to the frontline managers. You're actually trying to understand, in order to hit these goals, which have been set by senior leadership and then kind of trickle down into individual team goals and objectives. What do you need from a talent perspective in order to achieve that? And then when you actually get all those asks back rolled up to the senior leader, they can then prioritize and try and figure out, what's reasonable, what's not reasonable, and how can I prioritize the budget moving forward so that the ask that I'm putting into finance is going to make the most sense in order to deliver the goals. And so that's the kind of classic, if you want me to grow revenue 50%, this is how many reps I need, and this is how many sales managers I need, and et cetera. And you can kind of build the org structure that way. I think top down has a strong argument as well. We've seen organizations that have very clear profit goals. So if they're preparing to IPO, or maybe they're kind of trying to raise another round of funding and they have to hit certain metrics. Often the best way to control that is to set very clear guardrails, and you can really only do that top down. I know you said that you need 100 new hires in order to hit this new objective, but you've got 25 and you can reallocate the existing team that you have. And so tell me how you can achieve that. And that can work very effectively, especially in cost constrained environments. And I think it forces leaders to think a little bit differently and kind of cut off the pipelines or the product lines that are no longer make sense. Instead of just kind of trickling on. So that can be a little bit of a harsher way. But as I say, I think the kind of more agile, kind of rolling forecast, rolling planning makes a lot of sense because I think one point you just made was that if your product's lifetime, if your kind of hypothesis testing and feedback loop is shorter than a year, which, with any new product now and with the rapid expansion of AI, that's only going to get faster. You can't plan for a whole year and then revisit the plan 12 months later. You almost have to revisit the plan each month and kind of adapt to what's changing in the market. So you're kind of almost doing this top down and bottom up in one go in a loop each month to kind of land on the right headcounts. I don't know if I directly answered the question, because I think the classic response is it depends. But I think if you've got a data-driven analytics team that can actually support this, or if you have a tool that's going to help you to manage headcount more effectively, it would be wise to be running this kind of analysis monthly and just staying on target, so you're not drifting too far.
Yeah, I think you kind of just jogged my memory into this idea of the impact of top down versus bottoms up on the hiring manager and HR relationship, right? So in a bottoms up environment, if I request 10 people at a salary of $1 million, but I only get 8, I might have requested 10 seniors or a couple managers. And now I have to reorganize because I still have the same work to get done if I'm a hiring manager, right? In my recruiting world, if it's hires per month and I'm thinking I need senior principal recruiters, well, I still need X amount of capacity versus demand. So now in a bottoms up environment where I requested what I think I need to hit that target and I get less, then I need to change the relationship between the work and the person. So I need to, or change the profile of the person. So I might need to hire a level lower. I might need to hire a salary lower. I need to adjust my work to person ratio. So, a top down budget, you have folks submitting ideal. And then if you get less, you have to then negotiate with your HR team or your workforce planning team, like, how do I achieve the same result with this, smaller budget? On the contrary, in a top-down environment, if I'm getting a set budget for myself, I'm able to have that conversation proactively, and I can negotiate with myself what roles I balance this workload among. So, for example, if I wanted full lifecycle recruiters in a bottoms up environment, but I lose a few of them, well, I might have changed and had maybe some sourcers and a recruiter to like increase product and what I would sacrifice as I'm making my own plan. So I wrote a whole article about this called Recruiting Capacity Like a Pro, right? Like you have this triangle of I can create volume or production, I can create experience, I could run projects. So I might then be able to shift towards production, but I can then manage my expectations about what the experience of the other projects might be. And so you're almost in a top-down environment, kind of having that conversation proactively, which can be tremendously complex, versus having it over the course of as your hiring plan unfolds when you release your kind of modified bottoms-up budget. So I think like one of the major factors that you're considering what in your planning process and how it impacts different stakeholders is the style of which you do your planning impacts the timing where these conversations happen. So, are you proactive about your work ratios? Are you proactive about your budget? Or are you reactive after the fact and then you're using kind of the execution to guide what you do? And in my opinion, there's no, neither of those are right or wrong. I know it sounds kind of biased towards setting a budget top down so you can have that proactive conversation, but you don't necessarily know what the year holds when you release the headcount for next year. So you can start the year and you might have thought one thing, but now you need another thing. And that's kind of how I then incorporate the plan change rate into the future headcount planning is like, well, last year I thought I needed 10 recruiters too, but I actually only needed 7. So it's one of those things where in isolation, you can make a case for everything. And that's where I see a lot of pain happening in the headcount planning process for like non-vested stakeholders, non-core stakeholders is like they have a way and the way makes sense in that bubble, but there's all these different things to consider when you're doing it. And that's the conversation that's happening outside of that, individual hiring manager trying to staff the team that may or may not be a priority in a top-down budget with a workforce plan that has a transfer built in. Like it gets
Mhm.
so complex that those are the types of things that like really impact the stakeholders. So what are the things that you hear in your work? Like what's the pain of hiring managers? Where do you think it comes from? Like what type of pains do you hear from folks requesting budget or trying to manage their teams during this process?
Yeah, I think it's exactly what you just talked about is the friction of top down versus bottoms up. I think what we often see is an organization will go from kind of one to the other. So you're going through this kind of huge growth spike, and the business is booming. You say, like, we need to do whatever it takes to continue growing at this kind of pace, and that's what the market expects. Then all of a sudden you hit a market correction, and now it's very top down. And now you have to operate within this kind of confined budget. And that creates a lot of friction. And if the hiring managers have never really had to manage within that kind of environment, it becomes very difficult. I can think of countless examples, but I'll even talk about my own example of coming in from kind of a very high growth recruiting process where there wasn't really a budget. We were kind of requested the headcount that we needed with a very kind of flimsy business case, and we could get it because the cost of not growing because we missed targets was always much higher. Then all of a sudden we're in this kind of constrained environment. There's not enough hiring to go around to justify the capacity that we had and all the tools that we'd bought to kind of grow that capacity. So all of a sudden now we were looking at how do you actually do more with less, which is I think been the kind of the common refrain for the last few years. But it actually forced me particular to actually rethink how do I create the right team in order to deliver that more with less. And it was, if I restructure my team in this way, if I kind of cut these kind of pipelines that are actually low ROI, how can we get more of the stronger candidates from the pools that we know are going to return the best candidates, and maybe do less experimentation and actually shrink the team down so that we can be more focused on the areas that are most important, and then maybe get some efficiencies of scale by actually grouping together different pipelines. So, for instance, we started then to take entry level hiring from sales and customer success roles, which traditionally had been owned by business recruiters, but it made a lot more sense to actually pull them into a programmatic hiring approach where you would get this economies of scale because we've already built the infrastructure to screen and make decisions on vast amounts of candidates in one go, and actually onboard them in cohorts each month instead of all this kind of custom approach. And so these kind of shifts to very constrained environments mean that you can actually have an opportunity to completely reconfigure how you're doing this. And your point on the kind of recruiting capacity triangle, like if all your recruiters are maxed out all the time, they're not going to have the chance to step back and actually do this kind of project work, which, in the short term is taking time away from the actual recruiting activity, but longer term you're probably going to get these efficiency savings, which are then going to reduce the overall need for a large team. Which means that when you do need to grow again, you're not going to have to scramble and hire as many recruiters as you can to kind of fill all the roles. You actually already have a structure in place. You know you can accelerate. You know you can scale. You already have the data ready to go. And so I think that's where I see a lot of the friction. I actually think that's where a really strong HR team can add a ton of value. If you've got your HR business partners that are have been through these kind of exercises before and are kind of well trained and are looking at the data, they can actually sit with the leadership team and with their direct reports who've never had to go through this kind of constrained environment and show them what's possible, show them how they could maybe rethink about organizing their team, show them how to do dynamic resource allocation in order to deliver on the product that they need with the headcount they've got, or maybe even a slightly fewer headcount, but actually coach them through these difficult decisions. For anyone that's worked with a really strong HR leader, I think that's where the value really comes in. It's not until it gets pretty scary and you go through some pretty tough times that you really appreciate the value of a really good HR partner.
Yeah, I couldn't agree more. I think to our earlier point, right? The HR business partner is the translator of either things from hiring teams and department leaders to the finance team, or from the executive and finance team back to that hiring team. And to bring it all into like one package is it really, I would say the friction comes down to communication and the delta between expectations, right? I thought something was going to happen and it didn't, or vice versa. And so the remedy for a lot of the hiring manager pain throughout the process is usually just mismanagement of expectations, which is the reason why you and I are solutions providers, is usually the speed of the information and the quality of the information to the finance and the decision-making team about what are we capable of doing and why would we make an investment in the future. And so to your point, there's external factors. We have what are the market conditions? We have the introduction of AI that changes kind of the workforce ratio to work. We have globalization, depending on what industry you're in, that allows people to hire in different locations for different productivity and financial relationships. So you have all these external factors about what's happening in the market your company is doing. So, all right, am I a scale up? Did I just get fundraising? Or is our product early in its life cycle and its green field, or are we needing to develop net new products? So you have what's going on with your company. And then you have the context of not only those two things, but what did we do last year and what is the current capability of our workforce, who's available, and what do we need to then execute what our planning goals are, which is net new growth or investment growth of the business. And so all of that data needs to then be synthesized into one unified message so that a business team can make a call on what we're going to do to then disseminate it down through a planning process that can be dynamic. And there's just a lot of expectations to manage. So I think from a hiring manager perspective, there's a lot of information that's happening around you that you might not be privy to. Like if you run a recruiting department or a sales department, you have a goal to hire folks, to make sales, to, engineering, produce tickets. And so you want to continue down the path of what you're producing in this idea that what I am doing will continue happening. But this annual planning process is not necessarily anything different. It's just the one time where everyone kind of takes a step back, deep breath, what are we going to be doing? And this is the time where it's most likely to change. And so while you're trying to synthesize information during a time that it's most likely to change, you then have to then make requests and make demands or make changes to your team and learn about it all in one space. And so there's a lot of, I understand the plight of the hiring manager in this situation, particularly in places where the communication of that data is slower, because you'll find things out after the fact, after you made a commitment to hire, or after you made a plan to do something, it then changes and now you're finding out again. So as a hiring manager, I totally get it. And a lot of places, or for a lot of places, I should say, that conversation happens in a meeting called calibration. So if you're new to workforce planning or new to the building a headcount plan, there is a meeting that happens, or a series of meetings where people deliberate on what's being asked and then they negotiate based on the ROI of these investment requests, whether or not they do it. And so in either a bottoms up or a tops down process, you're either getting budget based on the negotiation of plans versus ROI, or you're trading roles and sacrificing from your team based on the needs of another part of the business. It's called this, we call it the calibration. It might be called other thing. I don't know if you have a different name for it, but there's a meeting that happens where there's some things that hiring managers can do, that recruiting can do to help their team kind of position themselves in the best place. Because, while the intention of the meeting is to do what's best for the business, what actually happens is it's the person who advocates best for their role gets the thing with the best, either the best sales pitch, the best data, etc. So for that meeting to really return the best possible thing for the holistic business, everyone should be coming to the table with what makes sense for that meeting to go well. And that's kind of what I want to get into next. But what have you experienced calibrations? Did you go through that process? Were you either in the meetings or kind of had to deal with the outcomes of those meetings?
Yeah, we had a separate a process called calibration, which was more performance related. I think ours were just called headcount prioritization meetings. It was not a very special name, but same kind of concepts. Like, how do you think about where you're going to allocate budget and headcount in the coming year, and then how do you then prioritize what gets done? Generally, the TA leader is in the room because they need to be. They need to figure out what is achievable, and how can I help direct that. But I think it can go like a number of different ways. I think your point of the person with the strongest story often is the one that gets the budget. But I actually think where HR can add a lot of value is that kind of skill set that we talked about before, of the business acumen for the HR business partner or the CHRO. Is like, where's that Venn diagram between the kind of EQ and domain expertise that comes from being a talent leader, with the kind of business acumen that actually comes with really understanding the business at a fundamental level, so that when someone says something, you can kind of like call out if that doesn't actually make sense based on the kind of discussions that you've been having from like a talent perspective. And so I think those can be contentious, but I think highly productive when everyone's on the same page and everyone's trying to achieve the same end objective.
Yeah, I think one of the main things that makes a calibration go well is the quality of your data for the conversation that plays out in the room. So there's the prep work, which is what have we done versus what did we think we would do in previous years. There's your metrics for how you've made your decisions. And then there's the context of your business, where you are in the life cycle, where you are as a scale up, what fundraising you have, what ROI you expect, et cetera. And so the prep work that you do for that meeting is kind of saying, the reason why I've submitted this headcount for next year are for all of these reasons. And then when calibration starts, what people are doing is they are negotiating for limited budget. What is the highest ROI and why is it the smartest investment? And this is kind of where the sales pitch, I don't want to say sales pitch, it's more just each person is betting on what the success of their allotment would return. And you're having this open conversation where each silo is fighting from a place of direct knowledge of what they know they can do or produce, versus your silo, which they're not necessarily downplaying what you can produce. They are just more confident in what they are able to produce and why it's good for the business. This not only rewards them in their career as executives or senior leaders, but it's something that will get them the resources they need to then hit those outcomes. And so as hiring managers, bring your ROI, bring your previous data, and then know how to speak about it in the context of where your business is, so that as people talk about the returns of your early stage product, you now can have a better forecast about what next year's performance would be based on the now more mature state of your your project. And then it goes back into TA. Like if you're a TA leader in this room, you are the point of calibration for whether or not something's possible. So in these meetings where folks are talking about what the ROI would be and why, they're saying it based on the idea that they can guarantee, or they think like, oh, I'll start the sales team in March. So look, TA, can you do that? And that's your moment. And if you don't set those expectations at the beginning of what is possible, then you are including yourself in the blame. And so it's a very interesting position to be in where you don't want to necessarily be a blocker, but you do want to create realistic expectations about what's needed and then use those points in your own calibration to then fight for the folks that you need, tying an ROI that those business leaders have presented to the cost of your team needed to produce. You and I have both been TA leaders. What are the things that, you've been, what was the resources you provide during your calibration meeting? Like when someone looked at you and said, "Hey, we want to do XYZ," and they turned to Chris, what are they saying?
Yeah, I mean, you as a TA leader, you're looking at capacity across the different teams. You're looking at kind of expertise you have within the department right now. You look at kind of current rec load as well, and then kind of you can go into market mapping and trying to understand penetration and things like that. Of if you need to grow in a given geography, do you actually have enough potential candidates in that geography to grow in the way that you intend to? And if not, what do you have to do in order to do that? Is it a compensation issue? Is it a kind of a in-office versus hybrid issue? Like, what are the kind of contributing factors? But I also think one of the kind of the big things going into that is understanding the current priority queue within the recs that are currently open. And actually, one of the kind of often contentious issues there is when you go into this planning meeting and you're planning for next year, if your team is currently, let's say, you have a team of 90 people, but you have 10 open recs, and you're saying you need to grow to 110 next year, but for the last 6 months you've been operating and delivering against your targets with 90 people, there is an argument there, and this is one thing I've heard hiring managers really struggle to refute is why do you need those extra 10 people when you've been able to deliver with the headcount you currently have? Do you actually need those 10 open recs you currently have, or will you be able to just replace those with the 10 new ones that you're requesting in the coming year? I'm very curious to get your take on this. Have you heard much about that, or have you seen that kind of manifest in different ways? And what do you think are the common outcomes and how the hiring managers actually respond to that?
Yeah, I talked about this recruiting capacity triangle, but I think every team has that same balance of what is direct production and what are the other things that are part of that job that have a longer term ROI. And so if you only focus on production today without thinking about experience, brand, project or department expansion, then you are saying, yes, I can meet the static goals that we've set today. However, we might be doing so borrowing against the future success or productivity. And so each individual department will have a um, longer term metric they can use, whether it's from sales, account retention, or contract value. For the engineering team, it's QA and bug reporting. So there's different things that, like, yes, we can hit these goals with X amount of members, but there might be a negotiation as to whether or not the other 10 are producing an ROI that dictates the cost of those 10. And so you then, it's inarguable that each position has a core component to it and other things that they do that make the business succeed, most notably interviewing for another position. I want to interview a team member. I can either write you code or I can interview an engineer. And so you're competing for this time. And so to have a good hiring process, to have good brand, to have good learning and training, there needs to be additional capacity that you can borrow against for high production. But it is a common mistake I see where people will take in this production only mindset, especially in a cost cutting environment, and say, like, we need to produce. In that instance, the HRBP, the hiring manager, and the finance person need to build a case to say the additional 10 costs X and the return of hiring those people is Y over a period of time, right? So sometimes the investments you make have nothing to do with production today, but they might be a return later. So let's say one of those hires is like a AI productivity trainer for your engineering team who will help your engineers have a co-pilot that's productive. Well, yes, we can meet the code demand that we have today with our current engineers, but if I hire this role, then maybe I have a return on investment for the future. And so you're bringing it back to this idea of if you're able to speak in R1, and the ROI is aligned to the planned ROI the business expects based on all the factors we were talking about earlier, then you will have a much nicer time getting the headcount in your plan than if you don't speak in that language. And so that's a negotiation point. I think when you start talking about the quality of that plan, then you start getting into the gamification of headcount, right? So like you're going to give me, I asked for 12, you give me 10. So I'm going to ask for 15 so I can get 12. That erodes trust if you I understand why people do that. That will erode trust over the long term. And I think, again, not to self promote our businesses too much, but if you have good data on what the actual ROI is from each of these team members, whether it's stored in your HRIS, whether it's stored in your finance system, whether it's from the unified data set between the two, you will be able to tell that story much easier if you can tell a complete story from hire through employment through ROI, ATS, HRIS, finance. If you have that data in one place, you're going to be able to tell this story in a way that's just much stronger and then get your plan approved or met or agreed with, even though they might not give you, they might agree with it and still not give you your people, but that's a whole other conversation. Each of these things has an org implication. Sorry. So when you have these different ROI conversations and you're saying, I have a productivity of within 90 that I should have in 100, that's that HR business partner conversation of what is the implications of hitting these targets, right? How Yes, I have one manager and we're doing fine having 12 people report to one, but what happens when it's 8 or 10 or 7, right? So management relationships, then there's work relationships. I expect each recruiter to do 5 hires a month versus 4. Well, what does that do to candidate experience and pipeline recruiting and time to fill, right? And so you have management relationships, workload relationships, and then you'll have the relationship between title and level, which always needs to be calibrated based on the total number of people in your organization and the number of titles, the number of job levels per role, and then organizing that information from a comp perspective and from a leveling framework perspective so that there's this base equity for what you're asking each department, each job level, each title to do. And so curious to know what your take is on like the once you have it all figured out, then what happens, right? So like you go through the planning process, you've made your ROI case, you're got your plan. Like, then what happens? Why is that important? How do you manage the post-planning process between now and the end of the year for those who finish up early?
Yeah, I think you kind of touched on I think a really important point is having the data correct going into those discussions, but then also recording the decisions that were made. So, if you say, I need 15 people in order to deliver this revenue goal, and you get 12 heads, if you're then short by three heads, when you come to the mid-year kind of revenue projections, you can kind of go back and say, I said I needed 15, we got 12. In order to kind of make up the gap, this is how many we need. And so you're capturing those, not so that you can say I told you so, but so that in the next planning cycle you can say, last year we came in at 80% of the requested allocation, and we achieved 80% of the revenue. We know that this request is actually more accurate. Likewise, you can then go back and say, okay, if I've got a request for 10 new solutions architects for my kind of post sales support, and then come February, you say, actually, I'm going to reprioritize one of those in order to hire another sales rep. You have to go back then and say, well, what changed since that happened? And so I think having that kind of very clear breakdown of the decisions that happened in that calibration meeting and what the implications of those decisions are likely to be, and then a plan kind of moving forward for the hiring manager to actually understand, okay, this is when I expect to kind of onboard these roles. This is when the next role is going to be released. And so you kind of, in collaboration with talent acquisition, actually have this kind of hiring plan moving forward, and then think through the onboarding process for these people. So you're already starting to plan ahead and say, okay, we have 5 new sales reps that are going to be starting in February. TA says they're going to deliver those. how do we set this up so that we know who the manager is going to be, we know what the first 30 days are going to be, who they're going to shadow, what the pipeline needs to look like in order for them to hit, and do all these assumptions make sense, or do we actually need to refocus our efforts between now and February so that when we do onboard these people, they're actually going to be in the best place possible. So it's not like you come out of the calibration and you say, "Yep, great, I've got my head count. Let's just keep doing what we're doing." It's then what, like, how do you actually think about, okay, month by month, what do we need to do so that we get the head count and we actually deliver the results that we promised to the business.
Yeah, I mean, I know you know, but the Unicorn Talent community I run has a free download for a QBR, which I always look at target to goal in every QBR that I do. But what you just said resonated in a big way, which is if you're going to give me a percentage of the resources to achieve a goal, then it might be worth it to track what your stated goal is and what the percent delta is, and I can track against both those numbers. And I think, for folks that are listening to this call, that can backfire. Like, I don't think people want it thrown in their face that, like, well, if you gave me more, I would have done it. Like, that could be viewed, especially the more senior you are, that could be viewed as like an excuse for performance, etc. But to a certain extent, it is helpful as you track that data year over year. Yet another benefit of working with a Headcount 365 or Meander is this year over year tracking. So if you know year over year what the target was, what your actuals were, and then what the delta was between the resources that were given to you, whether that's headcount or headcount plus tools or headcount plus whatever, tracking those goals is a story that you can have for finance during the prep process that allows you to set better context and maybe build an advocate on your side to enhance what's happening in your world, because with that finance story year over year what's happened. And I think that's, if you take nothing else away from the episode, as a hiring manager or department owner who is planning for next year, what's going to happen is what's going to happen. Like we mentioned earlier, there's too many other factors like company size, fundraising, market environment, geopolitical, whatever. Stuff is going to happen and you're going to be impacted. But if you track what the goal was, what your percent of attainment was for headcount, and then what your actual performance was against both of those numbers, that is a good data point for you to bring into future meetings, future annual planning meetings, to then help calibrate on the plan change rate, the production change rate, the target versus goal expectations as you do this process year over year. So great point. Love it. I think it's worth closing on that, actually. I know we're coming up at time. These episodes fly by the way.
Hmm.
And I always enjoy talking about this type of stuff. I think our last episode is building the plan for next year's plan. So, we'll come back after the Thanksgiving break and before the holidays, and we'll talk a little bit about, as you start to get your plan together, how do you build what you're going to do about it for next year? A lot of stuff that goes with that, both for TA leaders, HR, finance, and the hiring managers in the business. So we'll give you everything you need to know to prep for next year, which will then close out season 1 of the Headcount Experts. But so far, this is probably the best episode we've ever recorded, and I'm glad that we got to do this. Have a good holiday. Any closing thoughts with Chris Mannion on the impact of headcount planning on stakeholders?
I think it's the same thing we say every week. Come prepared with the data, be kind of familiar with what that means, and keep good records.
If you need any help putting the data together, reach out to Chris, reach out to myself. We're always happy to either talk here or in the Unicorn community and just chop it up on your plan, your situation. So don't hesitate to reach out. We may have some surprise guests coming in the next episode or next season. So stay tuned, and we'll look forward to the next episode of the Headcount Experts.